On today's hot sheet, I'm discussing house price indices from S&P, Shiller, and FHFA, all released this morning. Advice from the Realtor.com chief economist and a major prediction on rates. We've seen some loosening up the last couple days. We'll dive into that. And a push to eliminate property taxes. Love to know who's for that. We'll break it down, what that could mean in that landscape across the board. Today is Tuesday, February 25th, 2025. I am Byron Lazine, and the hot sheet starts now. Welcome into the hot sheet. Let me know here in the live chat which market you are tuning in from. Let me know if you'd like to not pay property taxes in that particular market as well. Love to hear from you on that. I think that is quite the dream, I guess, to have, not paying taxes, keeping all the money. Probably not the reality of the future. We're going to dive into that here as we wrap up the hot sheet. But before we do that, we have so much information to get through on Shiller, FHFA, and rates, and they all kind of tie in together. Obviously, when we look at FHFA here in a couple minutes, we get into some of their projections. How are they reassessing their projections, not just on the future of prices, but the future of rates? Okay, rates have loosened up the last couple days. It feels good when that happens. I'm really, hopeful that this can continue. And I know many buyers out there and many of your clients are also hoping that momentum can continue. Before we dive in, though, if you want momentum in your business for this spring market, join us in the BAMX community, where just tomorrow, in fact, happening in 30 hours, I will be doing a live role play. So if you want to throw your objections at me tomorrow in a office hour role play for members only, make sure that you're a BAMX member today so that you can get in. We do these office hours all the time. You see them right on the calendar here. You can add it to your calendar, jump right in on that Zoom link. But almost every week, we have something going on. So live role play is happening tomorrow, 3 p.m. Eastern. All replays live inside of the BAMX community. And it's also where you get access to all of inside of BAMX. That is all of today's and every day's hot sheet data, the charts and all of the information that you love from this show all lives inside of BAMX, inside of the classroom community, as well as all of our on-demand courses like our Zoodelio course, which everybody gets a Zoodelio cash offer platform as being a BAMX member. The community all lives in on the same platform. No more Facebook spam. So love to see you there. 3 p.m. Eastern tomorrow. We have office hours live role play. All right, let's get into this let's start with Shiller. Shiller is where we'll start, being the gold standard, the barometer that everybody likes to point to as it comes to prices. Now, Shiller is rear view mirror data. It's lagging data. It's just today's report was just released this morning. And we're really looking now at December, right? We're at the end of February. We're about to enter March, and we're just now getting December data from Shiller. So this is very accurate data for that reason. When you take 3 months, I mean, I know many of you who have, your MLS account, you're able to start really, having an opinion on the month prior in totality by day, 2, 3, 4. Sometimes you wait for a few of those, closings to hit the MLS. But, by the 5th day in March, you're going to have a pretty good feeling. You're going to have almost a full understanding of what February looked like in your local market, in your MLS. Shiller's not that way. Takes a lot more time. So this data is considered to be deadly accurate. S&P CoreLogic Shiller Index has now recorded and put out there this morning 3.9% annual gain for home prices in December 2024. Okay. Here you can see this chart comparing year over year returns for different housing price tiers. This is particularly in New York. So low tier, middle tier, high tier, all kind of, for the most part, following the same trajectory. We're going to get into their 20 city and 10 city composites as we typically do. Here's the analysis. It's been 5 years since COVID obviously took hold of global economy, sparking unprecedented volatility. Blah, blah, blah. We know all of that. National home prices have risen 8.8% annually since 2020. Okay, this has been led by markets in Florida, North Carolina, Southern California, Arizona. The national index continues to trend above inflation. Remember yesterday when we had the clips from Chad, the analyst from JP Morgan. I can't remember his last name. Is Chad something from JP Morgan, which I thought are just fascinating comments about how bullish he is on real estate super cycle. Chad Treyway, who was talking about the future of real estate and how bullish they are on these, even on residential real estate, talking about how, hey, what do you think is going to happen when rates eventually do lower? Like prices get pushed up even more. He considers this, a buying opportunity. And the other thing he said was, real estate, one of the reasons why there's investor demand in real estate and there's not investor demand in the long-term debt of the country, things like 10-year treasury, because of how big the deficit is because real estate is a hedge against inflation. I'm sorry, it was Treadway. So typo from Haley. I will let her have the blame there. But anyways, Chad Treadway, analyst, investor with JP Morgan, or investing money for others, JP Morgan, talking about how real estate is the hedge against inflation. As you see, what's still considered a bumpy road for inflationary times, uncertainty on the future of our debt, all these things. You see people looking for safe assets. And that's one of those things that real estate offers and continues to, offer for investors. And even Wall Street is still looking at how to get their hands on more single family homes, on more rental property. So there's a strong demand for homes. And what he said was under the replacement cost. Okay. And so you can go back and check yesterday's hot sheet out there. But this national index continues to tread above inflation. That is the definition of hedge against inflation. A few years removed from the peak appreciation of 18.9. Northeast continues to lead all regions with above trend growth. New York leads that for the 8th consecutive time. Boston reached an all-time high, the only market to do so for the period ended December 2024. All right, let's get into the 10-20 city. Here we go. As you can see, they're all kind of following the same trend line on the chart. But here that is broken up. We'll go to the 20 city, 10 city composite, or we'll go to 10, 20, and then U.S. national. So the November, December change, you see all negatives. Okay. So negative 0.4%, 0.04%, that is on 10 city, negative 0.13 on the 20 city, negative 0.15 on the U.S. national. But when you look at that 1 year change, the U.S. national up 3.9 as of December, 4.5 on the 20 city, and the 10 city is up 5.1. So these major metropolitan areas are doing well compared to, the growth of the overall U.S. national market. Okay, cities like Atlanta and Boston, maybe not particularly Atlanta, only growing at 2.35%, but these types of cities, particularly Boston, Chicago, Cleveland, Vegas, and New York leading at 7.22, San Diego, Seattle. These are cities that are driving the 10 and 20 city composite up to have greater gains than national. One area of concern for the 1 year mark, not necessarily concern because it's appreciated so much, but that actually has seen true depreciation, negative numbers, would be Tampa, negative 1.11% on the 1 year change, and that's due to, there's been a lot of multifamily building in Tampa. And so there's been new, product coming onto the market, inventory and all of that. But that's really primary. I think the negative drops primarily driven to the hurricane that Tampa experienced. And when you see that, you can, if you continue to see those climate issues in an area, we're seeing it in California, what the future of values are going to be in those surrounding areas. But when you see continuous climate issues, that future does, start to, show that there's going to be drops in prices. When you're just dealing with that over and over again, when you're dealing with the cost of insurance. And Tampa now, which has been one of the hottest markets of the last, 5 years prior to this previous 12 months, is now showing signs of slowing down, and now at a negative 1.11%. November over December change was negative 1%. So Tampa now dealing with an extended amount of inventory, less demand, insurance issues, and obviously those climate concerns continuing. All right. So there's Shiller. Let's jump now into FHFA and see where FHFA brings us. See if this has any differences really in what we're seeing reported from Shiller. So FHFA released this morning. This is the quarter 4. So we have the entirety quarter 4 and the December 2024 report. So similar to FHFA, or I'm so similar to Shiller, we are getting the report for December. Let's just start with the significant findings from FHFA. U.S. housing market has experienced this positive growth every quarter since the start of 2012. Okay, where are prices going? Do we think that they're going up? This is a buyer question. Well, every quarter since 2012, they've gone up. We've had positive appreciation every single quarter. And so, if history tells us anything, over the next 15 years, there's not going to be many 90-day periods, many quarters where you see prices move down. Okay. That's just based on where we've come over the last 13 years. Home prices did rise in 49 states between the fourth quarter of 23 and the fourth quarter of 24. The 5 states with the highest annual appreciation: Connecticut at 8.3, New Jersey at 8.3, Wyoming 8.3, Vermont and Rhode Island round out the top 5. The only decline was Mississippi by 0.2%. The top 5 home price appreciation markets were markets that are really, lacking in inventory and still have a significant amount of pent-up demand. Obviously, this is a supply and demand game when it comes to prices. Honolulu had the greatest metropolitan area at 18.7% increase. And then Cape Coral, Fort Myers, Florida, that's just, a half hour, maybe Cape Coral a little further, but, the airport in Fort Myers is 28 minutes from where I'm sitting today. They had a decline of 6.3% in that area. So again, climate concerns, hurricane concerns. You had a significant amount of new inventory enter the market over the last 5 years. And you're seeing that now really have a hit on prices, according to FHFA, all of those issues combined. Here are the home price appreciation over the previous 4 quarters for the U.S. The reason why, by the way, guys, we drop these charts every day into inside of BAMX, right? Like I started the show and showed you guys that if you're just entering, hey, join us over here, BAMX members, in our community on School. It's the #1 education platform. But the reason why we're dropping all of these charts in here, like this one that we're going to take a look at right here, home price appreciation over the previous 4 quarters for the U.S. Too often, we want the freshest data in a 24-hour period. We want to sift through the BS and make sure that you have really fresh, relevant data. But too often, I hear an agent on the phone or, telling a story about a conversation they had at a showing, and those conversations are led with like, "Hey, here's what's going on in the market." Remember, a lot of people are visual. It's why this show, a lot of the replays, still happen on YouTube. We are available on Spotify, which has the video on Spotify, but Apple Podcasts is the third out of the three platforms that the hot sheet is on. You've got it live on YouTube, you got the replay on Spotify and Apple. Apple is lagging in the data. Why? Because Apple doesn't have the video component that Spotify and YouTube does. This is a visual show. Most of our clients, most of our customers, most of our friends and family members, they can learn through audio only, but they learn best when audio is combined with visual. And even when we're educating our clients, even if it's a conversation in the driveway, you're not going to have, maybe every single chart, that you want to get access to, know exactly where to find it, right? It's a lot easier on school than it ever has been in the history of BAMX. But maybe you're just having that conversation and you just want to say, hey, I'm going to shoot you over something to look at that'll expand on our conversation here today on where prices might be heading. Or, when you're having a conversation over text, not just saying the words or typing the words, but actually sending over, this data, because this tells me as a buyer, this shows me a lot more, and I'm able to believe it a lot more, where prices might be going in the next quarter. Okay. And the next quarter after that. Remember, a lot of quarters will reflect the quarter prior. Okay. And so, this is going all the way back here, this particular one to 2014. Most people are buying on a 10-year cycle or more. That's the length of home ownership. And so, 2014, we were seeing a 4-quarter appreciation of 4.5, 5.4, 5.9, 6.2, 5.5, 5.5. I might circle this and say, hey, when times were normal, this is what was happening on home price appreciation. Okay. And then we had abnormal black swan event and prices actually got pushed up. If we're entering an age of more normal market and we're at 4.5 right now, what are the next 4 or 5 years going to look like? They might look like 2015, 16, 17, 18, and 19 if history repeats itself, which would be higher than the appreciation we've seen in the last 12 months. It would be 5.4, 5.8, and it doesn't repeat itself exactly. The point is the likelihood of these numbers to continue to move up based on history is extremely high. I can't tell you what the future is going to look like exactly, but I can tell you that in almost everywhere here across the country outside of Mississippi, we're seeing prices go up on the whole. The 4-quarter price change by state just over the last 12 months, when interest rates have been high, when interest rates have been high, keeping a lot of buyers on the sidelines, home prices have continued to go up. The JP Morgan, clip from yesterday that we played, go check that out on yesterday's hot sheet. I think we didn't get to it towards the back half of the hot sheet, but he's talking about a real estate super cycle. This is somebody who's responsible for investing $1 billion plus of other people's money. He was talking about his division at JP Morgan just accepted $1 billion to invest, plus that he's going to figure out where to allocate. And he's bullish on real estate, residential being one of those components. Talking about a super cycle, talking about fast forwarding to 2026 and looking backwards and saying, wow, anything you could have bought under cost of replacement. And there's a ton of homes right now that are still traded in your market that are going under cost of replacement, and there are buyers hesitant about buying those, buyers hesitant about buying under the median price point in a particular town. The growth of appreciation over the next 2 years on those assets, he believes, JP Morgan believes, it is going to be exponential. And when you get into 2 years from now and rates, he doesn't know when, none of us know when rates are actually lower, we know that they will come down. We don't know when. That you're going to see even more demand. You're going to see even more prices potentially being pushed up. And these numbers across the country could be, in fact, be even bigger than what we're seeing right now. Or if in 2 years they just continue on a quarterly basis like we've seen here, that compounding effect of that appreciation is obviously going to make a significant impact there. All right, if we just take a break up the regions here according to this FHFA report, we're going to look at the U.S. price change from the previous 12 months versus the last 12 months. So 4.7% according to FHFA. That is higher than obviously we just took a look with Shiller at 3.9. FHFA recording a December to December 23 to 24 mark of 4.7%. That is below the 6.9 experienced the previous 12 months. Pacific region up 2.8 over the last 12. Mountain up 4.8 over the last 12. West North Central 5.4. West South Central 2. East North Central 6.5. East South Central 4.1. New England at 7.8. Middle Atlantic 7.2. South Atlantic 4.3. Now, all regions have appreciated over the last 12 months. All regions appreciated less than what they did the prior 12 months. Okay. So real estate being cyclical, you are seeing, a period of time right now where we're not appreciating like we were, from 21 to 23, but we're still appreciating. And there are ingredients in the future that could suggest appreciation goes back up to a more rapid pace. Okay, there's a lot of people that want to tell you on X, formerly Twitter, that we're going to see a cycle of depreciation. There's no analysts that are really predicting that are credible. If you could find one, send it to me and we'll break it down here. You don't see any credible analysts predicting that. Every day we're talking about the elements that could make up a market that goes down. We're not seeing those elements stack up. We're not seeing any signs of that. And so appreciation might be slower. It might be subdued right now. And that might mean now is the time to actually get into the market. That's what JP Morgan believes based on our conversation yesterday. Anything else that I missed here on FHFA? I don't think so, but you can obviously go and get that. That's a 39-page PDF. So there's a ton of stuff in there. And by the way, the best way to find that, obviously we carved out, a bunch of the slides for you easily to just click and download here. But we also have the entire FHFA price index, just sifting through the stuff, making it easy for you guys to get it all in one place. It's all right there inside of BAMX. Of course, this one here is, and that's school.com/BAMX, link down below if you want to jump into the community with us. This one here is one of my favorite for educating our buyers and our clients on where prices are going. It's like, man, I really can't predict a black swan event like what you saw in 2007 or certainly what we saw in March of 2020. I can't project these, black swan events, but what I can tell you is from the 1991 until today, that real estate has done nothing but go up and to the right. And I have no reason to believe that that's not going to continue far and deep and into the future. And so it's not a timing game. The only time is when can you get in? Can you get in now? You can't get in 1990. You can't go back and travel into time and buy it 1990. Yeah, I'd like to buy on that chart in 1990. That chart hasn't touched 1990 at any point since then. We've never seen 1990 prices at any point in the last, however many years that is, 35 plus years. We haven't seen it. And so we can't go back and travel into time. The only way we can protect ourselves and have this hedge against inflation is getting on the chart, knowing that the future of the chart looks probably very similar to the last 35 years. Even if you have major concerns about the debt in this, which I do, I think I've got major concerns on the debt. Look at other countries that have bigger debt issues than America. And what's happened to those real estate prices? They're astronomically high. They're unaffordable for most. Here's a breakdown here. Just we'll clean up here FHFA, and then we'll jump into some other stuff. Here are those top 5 that we mentioned: CT, New Jersey, Wyoming, Vermont, Rhode Island, on the 1-year mark. After that, according to FHA, you have Illinois, New Hampshire, New York, Maine, Wisconsin, Montana, Nebraska, Ohio, Kentucky, Nevada, Idaho, Pennsylvania. So that's the run there on states that have where they rank on appreciation. If you're in that top half, that's probably relevant information for your audience and for obviously for your community, your clients, the people that are in your database, all of that. All right. I want to go, and Haley, I hope you have the clip up. If you could, Haley, go to, let's go to, this is our hot sheet show notes here, where we just break down timestamps for you and everything, so that you can get right to the stuff that you want to get to. I want to go to 641. This is a conversation we had with Danielle Hale, Realtor.com chief economist. We actually had this conversation on our own podcast, on Knowledge Brokers Podcast, separate channel at Knowledge Brokers Podcast. I'd like to go to that clip as she's talking about the 30-year fix. We've got a couple of days now of good momentum on 30-year fixed. And if you haven't, watched the pod in its entirety, I'd love for you to listen to this part of it and what she's talking about on rates. Most adjustments to rates since January 1 for, I just saw like JP Morgan's new outlook come out. Most of the updated outlooks are like rates are going to basically be where they're at right now, maybe slightly down at year's end, but still probably above 6 3/4. That's most of what I'm seeing, but tell me what you're seeing on rates in particular.
Interesting. Yeah, I think our projection is that rates will get into the low 6s. So under
the low 6s.
Yeah.
Really?
Wow. Low 6s as in between 6 1/4 and 6.5%. So not the very low 6s, but under 6.5%.
Wow. And is that hold on, let's be clear. Is that where we're going to end the year or the average for the year?
That's where we're going to end the year. So I think the average for the year will be closer to 6.4, 6.5%.
So she's calling for an average at 6.4, 6.5%. She's calling for an end of the year in the low 6s. And what was interesting to me about that is you're seeing most other analysts kind of ride the wind shift of a 30-day cycle. So you're seeing a lot of these projections where beginning of the year interest rate projections came in at one number. They're adjusting those now, late February, middle February. We've seen a bunch of these where they're increasing that number, saying, hey, rates are going to be basically at 7% for the rest of the year because of what they've seen over the first 45, 60-day cycle to start the year. They're kind of just, flying with the wind there. What Danielle Hale, Realtor.com is doing, and I know like Logan Motoshami does this over at HW, and a few others do this. They put out a number. They use their model and they support that model, and they put it out there at the beginning of the year. And what Danielle Hale is doing is sticking by it. I asked her in that pod, I said, will you adjust it at any point in this year? Do you ever consider adjusting? She goes, we may make one adjustment, but right now, even based on new information, even based on anything post January 20th that she's been able to internalize from the new administration, right now, Danielle Hale and Realtor.com is saying they are sticking by this low 6 end of the year, 6.4, 6.5, projection for interest rates. And I got to say, like, since I recorded that on Friday morning, just the momentum that we've had, it's only been a couple of days. It's like, it doesn't mean anything, but just the momentum of the last couple of days and some of the momentum where we're seeing like, hey, inflation, the underlying facts on inflation are not as bad as we've been talking about in January and February potentially. And, maybe, some of the DOGE efforts are going to get aren't going to be as bad for the economy as some people fear, and so on and so forth. and you're all of a sudden seeing now on Friday, that day, that was obviously Friday's number came out before, or the number came out after she made those statements. So it's not like she saw this 6.89 number and was like, I'm going to stick by my annual. She was coming off of a one day at 6.96 and really a whole bunch of days in the sevens prior to that. But Friday ended at 6.89. Yesterday we came in at 6.87. If we just take a look at, what might be an indication on where we might be today. I mean, look at the last 24 hours, the 10 years moving down. We're at 4.31 right now to start the day. That would suggest that, and as we're sitting here, it goes down to 4.298. These are the best numbers we've seen, almost the best we've seen in a 3-month cycle. We're almost down to our bottom there in beginning of December and by the way, beginning of December was kind of that time frame when I think Realtor.com, meaning locked in that projection on the lower rate. Like we're starting to trend back down to that area on the 10-year. The spread is better. We could see a 30-year fix move a little bit lower. This is now as we're getting into, really breaking into this spring market and getting into, more buyers entering the market potentially. We'll see what this does for mortgage applications later this week. But we're starting to see a little bit of that tailwind on rate. I know if we get to 6.75, it's not like, it's not great for everybody. Not everybody becomes able to afford real estate at that, but it's better than 7.13, which is where we were 12 days ago. On February the 12th, we were at 7.13. Even at 6.87 today, we're talking about a quarter point swing there. So there's some momentum happening. It's interesting to see that Danielle Hale, Realtor.com, is just completely sticking to their number. And we'll obviously continue to track that. If they make an adjustment, we'll have her back on and get the reasons why and all of that. You can have that whole conversations over at Knowledge Brokers Podcast if you're interested in that. If you live in Florida, or if you live in a state that has high property taxes, you're probably interested in following the governor of Florida, Ron DeSantis's new proposal. DeSantis is endorsing a plan to eliminate property taxes in Florida. Now, the comments on this Instagram post, I won't go into them. It's over on @NowBam on Instagram. Were pretty crazy. A lot of the comments. Most people are just like, how the heck does this work? Florida already doesn't have income tax, thankfully. But property taxes obviously support a lot of the local municipal, things that you just grow accustomed to having, a good police force and, having a fire station and good roads and all of this kind of stuff. But in part of DeSantis's Doge task force, he wants to audit spending and explore abolishing property taxes. So be careful of the headline, explore abolishing property taxes. And then actually doing that are two different things. I think one thing that he says in here, he talks about, the great job he's done, blah, blah, blah. They've brought down debt by 41%, which is admirable. You can build up a rainy day fund like Florida has. They've built up their rainy day fund since he's been in there, but a state that actually is willing to pay down debt. I mentioned this on my local radio show up in Connecticut last week. Like, hey, Connecticut right now is like bragging about their rainy day fund, but they haven't paid down any of their debt. So it's like when you have a rainy day fund in that state of, I think a little bit over $4 billion, but you have debt and a pension debt problem that's over $8 billion. It's like, what, great. You have a rainy day fund, but you owe double that in debt. And so really watch what your politician locally in the states are doing with, like, are they actually paying down debt? So that is a good thing that the particular state has done, but he wants to do this Doge task force. It's the new thing on how to run government. He wants to eliminate waste from a state perspective. I think whether you're for Doge federally or not, I think all of us can agree, like, finding true waste and eliminating it from, where tax dollars are flow. Nobody would argue that. That's, everybody would say, if there's true waste out there, let's go ahead and eliminate it. Okay. So DeSantis says, here's something that's obviously going to get a lot of people, think retirement age, Florida. A lot of people behind this, right? That are struggling to, high insurance costs and all of that. He's goes to say, like, you buy a home, you buy the land, and then you've been taxed so many times. Is it your property or not? For just being on your property, you've got to write a check to the government every year. Talking about, a lot of people can't afford that. That's where it really gets into, really leaning into that, some of that older population. That's a big issue. We're going to be looking at different ways to bring relief from that. He also says something about the exemption, the tax exempt, the homestead exemption that Florida particularly has. A homestead exemption being, locking in where your property insurance can't go up a certain amount, or property taxes rather. I think ultimately where they're going to land on this through this 1 year look at abolishing property taxes is doing something with that. And he even kind of mentioned that, like maybe making that better or what have you. But I think, and the reason why I wanted to bring this up, I think what's interesting about these headlines, obviously DeSantis is, he's grabbing headlines, good for him, whatever the case may be. And so what's interesting about this is, like, what other local governments, what other states can actually look at being more efficient? How can you look at being more efficient, obviously, in your own business? These are good conversations to have, even if, abolishing property taxes, it might never work in the way we live our lives, and it might be silly, but just considering how to make taxes a little less cumbersome, how to be more efficient with those tax dollars so that you don't have to continuously increase taxes on the people. These are good things. How can you be more efficient in your business? How can you make the dollar work for you a little bit better? These are good conversations, good things to be looking at, because there are certain things that are going to continue, unfortunately, to move up and that are out of our control if we want to stay a free market, like property insurance. If property insurance is going to continue to move up at an astronomical rate, well, for homeowners to be able to afford and for us to widen home ownership, not reduce the amount of people that can own these homes, you have to have some type of savings in other areas. It's why, land in certain areas might take a hit if cost of materials and cost of insurance continue to move up. Is that land, with the cost of building in the Palisades, is the land less or more valuable than it once was? I'd say today, with all of the destruction, this is just an unfortunate thing to say, the land is a lot less valuable. Like, if you're the first person that gets to build, do you want to build? You're going to be looking around at destruction. That land, which you typically would say land is, the value of the land will never go away. Well, I think the value of that land in particular has taken a huge hit. The value of Gulf Coast land in some of these areas, look at Tampa, we looked at it earlier with the numbers, has taken a hit. The land is not as valuable. So we'll see what happens here with this push to end property tax. I don't think it'll happen. You're going to have to get the money to support things in other areas. But looking for ways to become more efficient is probably a good thing. Do it in your own business. I'd encourage you guys to obviously continue to audit your own. An audit is a good thing. Audit your own business. Do it every 90 days, every 6 months. Like, audit, where are you getting the most efficiencies in your business and the most value in your business? All right, there's your hot sheet here for today. I will see you guys later on here on the channel. Make sure to subscribe to the Now Bam channel so you don't miss anything on a new Real Word podcast, and obviously back here tomorrow morning. And looking forward to seeing all of you guys then. Until then, of course, toodaloo.